So according to our syllabus, some problematic syllabus we have is cash flow statement and tax planning in respect of residential house, that is second module. Tax planning in respect of salary and house property, that is third module. Tax planning in respect of PGBP including depreciation and MAT is fourth module. Tax planning for capital gains and other sources and dividend purposes, fifth module. So let us start with third chapter, that is first chapter is about all theory introduction. So tax planning, and let us start tax planning in respect of salary and house property. Because cash flow statements we can do it, it is easy. If possible, I will make video on this later. So first we'll learn tax planning in respect of salary and house property. Well, first we'll learn salary, then house property. So tax planning in respect of salary. What is tax planning? Tax planning means reducing the tax. The NSSC who is liable to pay tax, how he will reduce the tax so that he can pay less to the government. So in respect of salary, how the tax planning is done, let us see. So what is salary? Salary means any payment or any remuneration made by the employer or given by the employer to employee. Why? Simply he'll give? No. An employee will render some service to the employer, then only he'll give payment for him. So the relation between employer and employee is must in salary. Salary is not only cash that is given. It includes everything. It includes basic salary, DEA. If your employer is happy with you, he will provide you some bonuses, DEA. Still many salary includes many items such as commissions, fees, wages, pension, annuity, gratuity, perquisites, leave encashment, employer contribution to recognized fund when it is exceeding 12% of salary. All this salary includes. Ignore, just I said for knowledge purpose. Then how this salary is calculated? So we have one format of calculating income from salary. To calculate incomes from salary, we have one format. So computation of income from salary for the assessment year 2020, 21 or 21 to 22 based on the question. So computation of salary or income from salary. Particulars: basic salary or basic pay or wages. If it will be given in question, you have to just mention and take amount in auto column. Commission, if it is given, you have to take. Fees, take it. Bonus, take it. Employees contribution to recognized fund when it is exceeding 12% of salary. See, listen, employers contribution. When it is employees contribution, we will not take in salary, we will take it in that comes under reduction 80C. Employers contribution to recognized fund exceeding 12% of salary, you have to take. Then interest credited to recognized provident fund exceeding 9.5% per annum, you have to take. Then allowances. What are these allowances? I will tell you all. Perquisites. What are perquisites? Even I will tell this, because these two are very important according to our syllabus. Profits in lieu of salary. Any profits in lieu of salary if you have to take it here. Retirement benefits. Retirement benefits means like whatever the benefits you get after the retirement, like gratuity, pension, all this we will include here. All this should be added. You will come across with gross salary. Then less deductions under section 16. So there are 3 deductions under section 16, that is standard allowances or standard deductions. Standard deduction is 50,000. This is same for all the sums. Then entertainment allowances under section 16 too. Entertainment allowances will be given in if given in question, you have to take, and some calculations are there in entertainment allowances. I'll tell you how it is. But always remember, this entertainment allowances is applied only for government employee. Then professional tax, if given in question, take it. All add it, take it here and deduct from gross salary, because we have taken less here. So once you have deducted here, you will get income from salary. This is not our syllabus, so this is only calculation of income from salary that you have already learnt in your second semester. So till here, once you calculate, Once you calculate, what you have to do, tax planning you have to do. We will see this later, how it is done. We will see this later. Since I said you all that I will explain what is allowances and perquisites, so please let us go there. Let me go there. First, allowances. Okay, allowances. What is allowances? Allowances is nothing but it is a cash payment given by the employer to employee on regular basis in addition to salary. With the salary, an employee will give one even cash, extra cash, that is known as allowances. Hope you understand this and you all know this. Just for knowledge I am telling. See, you can read it. An allowances is a cash payment to employee or on regular basis in addition to salary to meet certain expenses incurred by him in connection with the service rendered to the employer. Okay, this is allowances. Why he'll give allowances? When the employee is rendering service to him with happiness, just keep in mind a clue, with khushi or with some happiness he'll give allowances. Okay, or not happiness only, you can understand. No, just understand it. Allowances may be wholly taxable, partially taxable, or wholly exempted from tax. So the taxable, which the wholly taxable allowances may be wholly taxable, partially taxable, or wholly exempted from tax. First we'll talk about wholly taxable allowances. I know you will feel little heavy, but you have to understand this because it will help to solve sums. Okay, you have to understand allowances are perquisites. If you understand, that's enough. We can easily solve sums. Allowances, wholly taxable allowances. There are some wholly taxable allowances like dearness allowances, fixed medical allowances, servant allowances. Fixed medical allowances means it is given to employee to meet expenditure on medical treatment either for employee or his family members. Next, servant allowances, it is fully taxable even though given to low paid employee also. Non-practicing allowances, it is given to the doctor, that is also fully taxable. Warden allowances, when salary is given to warden of hostels, even that allowances is fully taxable. Overtime allowances, if an worker, that is employee, is working overtime, if based on that any allowances is given, that is also fully taxable. Hilly allowances, lunch allowances, remember lunch allowances is fully taxable. Okay, city compensatory allowances is also fully taxable. Foreign allowances to non-government employees also fully taxable. Employee education allowances to employee, listen, to employee is fully taxable. These are fully taxable allowances. Next we have is partially taxable allowances. In partially taxable allowances, we have partially taxable allowances means what? Half amount will be taxable, half amount will be taxable, half amount will be exempted from tax. They are like house rent allowances, which is very 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 important for our syllabus. So concentrate on this. Entertainment allowances, it is also fully taxable. Special or other allowances, just concentrate on HRA and other allowance. In this other special and other allowances, 2 or 3 for our syllabus. HRA, okay. Partially taxable is done. Wholly exempted, which are wholly exempted means we should not take only. Wholly exempted like foreign allowances to government employee, uniform allowances to high Supreme Court judge, allowances received by a teacher is also exempted from tax. Means you should not take only, just you have to ignore and give notes. That is fully exempted allowances. This was this was fully exempted. Okay, from this HRA is done. Entertainment allowances is also half. Why, I'll tell you later. Special or other allowances, I asked you to remember 2 or 3. No, those are special or other allowances. 2 or 3 I said, Children education allowances, that is half taxable, half exempted. What is exempted limit is 100 per child, maximum 2 children. What is this? Once you solve some, you'll come to know. I'll try to solve inshallah. Children hostel expenses, even this is important because we have many questions based on this also. 300 per month per child, maximum 2 children is exempted. Example, see, 100 into 12 is how much? 12,000. If the amount of children education is more than 12,000, what you will do? To take that amount minus 12,000, whatever amount remains is taxable. If the amount children education allowances is 10,000, then that is exempted, because 100 into 10, 100 into 12 per month, no, per month 12,000 till 12,000 it is exempted. Example, you understood? 2. Wholly taxable allowances is done. Partially taxable allowances is done. Wholly exempted also is done. Before only I said, first I said, like, understand, no? Wholly exempted tax allowances is also done. In partially taxable, we have seen HRA, entertainment allowances. This here only we have some calculations, so just concentrate calculation on HRA, how HRA is calculated, because very important, very important, as I say. Whatever I have explained you till now, keep aside, concentrate HRA. HRA, just remember, HRA is one allowances. HRA is one type of allowances, how it is calculated. Just remember that. Okay? Whatever I said, if it is confusing, please keep aside, just concentrate here. HRA, house rent allowances, how it is calculated. What is HRA? HRA means any, see, given by the employer. This HRA is house rent allowances, means the heading only, the name itself says house rent allowances, means where allowances means cash, where rent is given by house rent allowances. Okay, it is allowances where the rent of the house is when employee is living in the house, the rent of that house is given by employer. That is house rent allowances. Why all meaning keep aside, just concentrate how it is calculated. House rent allowances, particulars, amount, rupees. First, in question they will give HRA received, house rent allowances received. Take here, take amount in outer column. Remember 2 columns, please. Less exemptions under section 10, 13A. Or if you don't remember this section, please don't mention. Just write less exemptions. Least of the following, any whichever is less from the following mentioned, these 3. What are those? Least of the following. Actual HRA received. Actual HRA received means the same amount you take here. Then, I'm sorry, I wrote ulta pulta. Okay, no worries. Then this is A, this is B. I wrote ulta format, just to make it straight or correct. So rent paid minus 10% of salary. Okay. Then third step is 40% of salary. 40% of salary. Normal. Here instead of 40 we will take 50 when we have in question the metropolitan cities like Kolkata, Delhi, Chennai and Mumbai. I hope you understood this. Once you take this 40% of salary, this rent paid will be given in question. It may be given per month or total per annum. If given in question, particular rent into 12 or amount, total amount is given, just take rent paid minus 10% of salary. From all these 3, whichever is less, you should take here. You will come across with house rent allowances. House rent allowances. Here, as I mentioned here, 40% of salary. What does salary here includes? Salary direct. See in question, basic salary will be given, DA will be given, bonus will be given. Which salary, how salary you will consider in HRA? So here you make it as working note 1 for salary, better, or else based on your mindset you do it. So here salary, what you have to do is, salary for the purpose of HRA is basic salary. They'll give basic salary, basic pay, plus dearness allowances only if it is entering into retirement benefit, then only you have to add DA. If in question they don't mention retirement benefit, please don't take only. Don't take, give a note, DA is not entered into retirement benefit, so it is not added into HRA. Plus commission if based on turnover. If based on turnover commission is there, then only you have to add commission in HRA for salary to calculate salary. Salary equals to basic pay plus dearness allowances if entering into retirement benefit plus commission if based on turnover only. If only commission is given, don't take. If commission based on turnover is given, just take. You will get total salary. This salary only you have to take here where 40% of salary, even here 10% of salary. Once you do it, you will get actual HRA. Allowances is done, fully exempt, fully this is done. Where is allowances? Wholly is done, partially is done, wholly exempted. Wholly taxable means remember all this. Exempted, in this you remember HRA how to calculate. Okay. Even entertainment allowances, how you will calculate here when I'll explain, no, I'll tell you. This HRA is important, please keep in mind. Allowances is done. Our first part from format allowances is done. Perquisites I'll explain in another video. It is almost 16 minutes, so perquisites I'll explain in another video. After perquisites we will go to tax planning, how tax planning is done in salary. We will start one problem. Okay, thank you.